Bajaj Auto trades with cuts despite a strong sales in September. The management tells CNBC-TV18 that it's been a rocking festive season so far. They also expect the export momentum to continue.
Goldman Sachs issues a bullish note on defense players, solar industries as well as PTC industries, expecting higher defense indigenization and exports. Both the stocks are higher in trade by 3.5% to around 4%.
Abu Dhabi-based IHC is set to pick up a majority stake in Sammaan Capital for $1 billion. Sammaan Capital's Gagan Banga tells CNBC-TV18 that the cost of capital will trend lower, relying on return of equity of about 20% by 2030. The stock sees some profit taking after a massive surge ahead of the board meeting to issue funds.
V-Mart retail surges close to around 10% after a strong second quarter business update, which reflect 11% sequential same-store sales growth and a 22% growth in revenue.
That's not all. India's largest biofuel producer, TrueAlt Bio, sees a steady debut, listing with a near 11% premium to its issue price. The issue was subscribed over 72 times. Management joins us to discuss their post-listing strategy shortly. Stay tuned for that.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And the markets actually have come off the low point of the day, and the breadth of the market actually is in favor of the bulls. We had a good session on Wednesday. We're hoping for a good wind down to the week on Friday. Let's see how it goes. But at least that initial dip has got bought into, Mangalam.
Initial dip has got bought into, Nigel. And you know, the good part is that barring HUL's second quarter update, all the updates that have come in are fairly heartening. And the street is building on that. Case in point, something like an Eternal. Just look at Eternal. HUL 2 from the lows had seen a big recovery, and now also currently, has seen a recovery from the lows. But Eternal has seen a spike up, nearly 4% recovery from the lows, currently at the high point of trade. So we'll watch out for how all these consumption names are doing, because we've seen big moves on, V-Mart retail, pull up V2 retail, all the others are doing extremely well. But we've been talking about the broader market action, primary market action as well. Vijay Nirani, who's the managing director at TrueAlt Bioenergy, joins in now. The company saw a steady listing, nearly 11% premium to its issue price, and now the stock holding up with a gain of almost 8.5% as well. Remember, they have about 3.5% market share in ethanol production for the country. What we'll ask them is the growth outlook for FY26, FY27, what they're targeting when it comes to market share, asset turnover on their new capex, and the third most important talking point, issues with feedstock availability as well, even as they have a fair amount of capacity. Thanks a lot for joining in, and congratulations. It's been a good show for all you guys on the bourses. The question is what happens from here on, because your issue was subscribed 72 times. There was obviously a lot of interest that was there on it, and what you're going to do with that interest and this responsibility that the street has placed on you is something that will determine where you go from here on as well. So it's a milestone, but the journey is still fairly long. And that's exactly the first question. You've been growing well over the last couple of years. Do you think you can expect this rate to continue if you have put a range to it, Vijay? And the second part is in terms of market share. You have about 3.6% market share. With the new capacity coming on board, what's the kind of market share that you're eyeing over the next few years?
At the outset, thank you so much, sir. Thank you for having us here. This absolutely feels surreal. This is a journey of almost over 2 years now, and for TrueAlt, 3 years. The kind of response that the capital markets and the country by large has given to us, it's only given a lot more of a motivation for us to work harder and keep building this company for the greater good. That said, just on the company, we just have about 3 years of history, and we've been growing at almost about 50-55% year on year. And the capacities to its peak, we've got 5 business verticals. First one is ethanol, where we've already infused capex to its rated full. That is at 20 lakh liters per day, or 2,000 kiloliters per day. That gives us a potential of almost about 6 to 7% of the total country's demand. So, of course, the last year's market share was 3.6%. But the potential market share we have of the fragmented industry that is in the ethanol sector, we have about 6% of potential that we could deliver in the days to come using the capex, or rather the capacity that we've already built.
All right. So that implies near doubling of your revenue from here on.
So I wouldn't call it almost doublings. I would say we would hope to continue on the same trajectory that we have done in the last 3 years. This, I would say, based on the potential of the capacity that we've already infused. And also the other two verticals that we have that are set to come in by FY26 and few by FY27. That would be compressed biogas and sustainable aviation fuel.
Got it. All right. Hi, Vijay, and congratulations on the listing. Looking forward to chatting up more often. But we could see the smiles, they were quite wide as you all rang that bell. So good on you all. Let's get a few more details. Your current capacity utilization, I think, is around 45%. By when do you expect to hit, say that 70% odd mark, which is considered high utilization levels? Point number one. Point number two is 100 days in terms of trade payables currently. You had planned to reduce it, I think, to around 52. By when would that happen?
Thank you so much for that. Yes, it is a little, it's unimaginable. We're still pinching ourselves to see the reaction. So that said, on the first part of the question on the capacity utilization, if you read the note on the RHP, we do mention that we have been building the capacity over the last 3 years. That is, in FY23, we had a capacity of around 590 kiloliters per day. In FY24, that capacity increased to 1400 kiloliters per day in the last quarter of that financial year. And in FY25, the capacity again jumped to 2000 kiloliters per day, where 1800 was put to use. So when they calculate the capacity use, they are doing the calculation based on the entire gross, the installed capacity. And when we do it based on the gross capacity on a 300-day basis, we see a lower capacity utilization. Whereas now that we've got the whole capacity at play, we should see at least in fact, we are estimating a 60 to 70% of a conservative capacity use for the year to come, and from there on to jump to 90% from there. That's from FY27 onwards. So that's the expectation we carry.
And the payable days?
And the payable days, however, it is, if you compare it with the industry, we have a better payable days as compared to the peers. Of course, here there's not an apple-to-apple comparison with peers. However, so far we used to have a lot of transactions with the promoter group company where we got this leverage. Now, the reason for us to go public was also to create a working capital corpus so that we could build on our inventory at the cheapest raw material. The price of raw material is very dynamic in our case. And the business largely is at what price we buy the raw material so that we keep focus on the bottom line and keep increasing the bottom line. So when it comes to the payable days, we will be building on inventory. We will be having a lesser payable days thanks to the proceeds of the IPO, wherein we are building close to about 425 to 450 crores of corpus. That will go straight as working capital requirements.
All right, we take that point. Thank you so much, for explaining that to us. And also, you said that you've been pinching yourselves. Good, you've been pinching yourselves. If you pinch each other, then that'll become violence. And secondly, what you don't need to do for sure is pinch the shareholders. And the shareholders, what they really want to know is what are the kind of margin levers that you have from here? You said that raw material prices are fairly dynamic, fairly volatile. But I'm looking at, some of the raw materials that you source. And the availability is always an issue. So what is it that you're doing to, make the availability consistent at a predictable price, and basis your increased capacity utilization and everything else that you're doing, what would the margin impact of that be? Could we see them move towards 17, 18, 19%?
So two parts to this. So the opportunity that the biofuel story, or rather let's begin with the ethanol story, carries is we've got 5-6 different prices. Ethanol from syrup has 65 rupees a litre. Ethanol from maize has 71 rupees a litre. From rice has 64 rupees a litre. So there are about 5 different prices that is there. And the OMCs pick the quantities at that range. Now, we have got out of the 3, raw material price, cost of conversion, and the selling price. Our selling price is already fixed. So we don't have to worry at what price I'm going to sell. Then comes on the floor level, the efficiency or the cost of conversion. We are at almost peak levels of stabilization, or rather best efficiency, because we are actually utilizing the gas that comes out, the CO2 that comes out, we are bottling and selling. The spentose that comes out will be diverted to the compressed biogas plants as additional revenue. So it is as dated as possible. So that leaves us to build a bottom line or margins on the price of the raw material in itself. So just to give an indication, or rather what we see, the commodity price trends, that is rice or maize or sugarcane, molasses for that matter, not the sugarcane in itself, but the molasses for that matter, the delta in the price from the lower ceiling, the lower brackets to the higher bracket is as high as sometimes between 20 to 25%. And we end up achieving this 15-16% of EBITDA on the fairly median on the higher brackets of the EBITDA. So this is what, and that's the structure of how the government usually prices the price of ethanol or the raw material.
So by and large,
the idea largely would be to buy the raw material when it is cheapest.
Got it. So by and large, this 15-16% is sustainable. On extreme cases, it can go to 20-25%. But, what analysts should usually pencil in is a 15-16%.
I wouldn't. No, I wouldn't consider it at 20-25%. It could, that's the delta of the raw material prices. So I would only say the EBITDA would hover between 15 to 16-17% if we play our cards right.
All right, that's fairly indicative. Thank you so much for joining in. Once again, congratulations on the listing. We will keep having conversations with you quarterly post you give out your numbers. With that, we'll take a short break, come back on the other side. We have another management waiting by, that of CMS Info. We're joined by Rajiv Kaul in our studio. Stay with us for that.
Welcome back. Markets slipped a little bit from the highs of the day, but that's par for the course, one would say, after the kind of rally that we saw in Wednesday's trading session. But as promised, we have the management of CMS Info Systems. Rajiv Kaul joins us in the studio. Thanks, Rajiv, for coming down. Well, we've got a few points to discuss, so let's first highlight that. FY26 outlook remains a little bit tepid. What's the outlook from there on? The margin guidance, and what about that cash in the books? Is there some inorganic growth opportunities? Well, Rajiv, kudos to you all actually, because you all have seen some softness in the first half of the year. So in that sense, shareholders are not going to get that, surprise all of a sudden, the negative surprise. Explains why I think the stock as well is closer to a 52-week low. That said, you've called out that things should look up from here on. And one of the points is you're seeing the total number of outsourced ATMs at around 120,000. You're expecting it to go to around 135,000 by the end of this year itself. So a couple of points. When does this tender open? And out of the incremental ATMs, outsourced ATMs, how many can you garner?
Sure. There's so many questions, one question out there. So H1 has been softer. I think for us as a management team, we want to be upfront about and share as we see the markets and call it. I do think our opportunity in the next short term, mid term, long term is still very solid. The rollout of these remaining 15,000 ATMs already happening as we speak. So they're not linked to any tender or whatever. And I think this will go up to 145,000 in FY27.
Okay.
So I think the ATM rollout outlook is fairly good. They have shrunk temporarily, which has affected growth for us. But I do want to say that this affects 60% of our revenue, which is our oldest business. 40% of business is different, around consumption, around technology and digitization.
Yeah. So, but how much of this incremental ATMs, the outsourced ATMs, what is normally your hit ratio?
So our current market share is 57%. 3-4 years ago, this was about 45. So I think I would hope that we take to 57 and maybe higher.
60%, but let's talk about the other 40% of your business, which is, been growing at a fair clip, and you've been wanting for that to increase in the contribution itself. Right. That's the IoT part.
Right.
Let's talk about that. And in that Vision AI, I remember the last time you joined us, you said that, it's about 7% of your sales. You're aiming to take it to double digits. So where are you on that journey?
Okay.
And your touch points, there were what, 25,000, and you were going to go to 50,000. Where are you on that currently?
So, great questions. I think our technology business, which was roughly 5% revenue about 2 years ago, is already at 10%.
Got it.
At
That's
10%
Vision AI.
It's Vision AI mostly. It's also do the software work we do for banks.
Got it.
So we have also resegmented our business, Mangalam, from a perspective of simplicity, also thinking about the broad macro themes. The themes we want to play on is outsourcing, which is what we've been very strong in, consumption and formalization linked to GST reforms, and third is technology and digitization. So in technology, we do Vision AI. We also are looking to see what we can do in broader payments. I think that business should contribute now 15% revenue by FY27. So that business from 0 to 5 to 10 to 15, we're talking about FY21 to 27. That ramp up is what we are seeing.
Got that.
Vision AI, we started from almost 0. We are now at 30,000 sites already. We should be 45,000 sites by the end of March, this year itself. So that's a quasi-SaaS business, and that's why we've been able to scale it so well. Within the BFSI segment, we've taken market share from 4% to 25%. And hopefully by the end of the year, it'll be about 30-32%. So rapidly growing business, large TAM, but I do always like to say that these are businesses which are fiercely competitive. And therefore, being out there, investing with technology and being ahead of others is really important.
Well, I think the industry has slowed down a little bit, which is reflecting in your first half of the year performance. But as you're saying, your market share is rock solid, and you're looking to build onto that as well. So let's talk a little bit about pricing. When do you see improvement, and what are the levels that you have in store? I ask you this because your realization per ATM, I think it was around 7,000 odd 4-5 years ago. That's moved to around 11,500 odd. Even if I look at your BLA transaction, out there, I think it was, 11 per transaction or thereabouts. That's moved, I think, to around 18. When do you see pricing improvement? Because you're going to be gaining market share, you're focusing on volumes, but pricing at some point of time as well, you'll have to go ahead and, take the plunge.
So if I think of the last 4 years, let me talk data. And, Mangalam, your earlier question, the fact that our other businesses are growing rapidly, despite our ATM solutions business, which has doubled in the last 4 years. So it still continues to grow very rock solid, like almost 15-17% growth. Will slow down a little bit, but still will be double-digit growth. I think a market like India, which is fiercely price competitive, we are a market leader. Frankly, we want to be very aggressive on pricing, right? Because there is, I think prices have grown well, and that's why the growth has come up. But in our interest, I would say that if prices remain competitive and we innovate with our delivery models, operating models, keep our high margin profile intact, I think that's great for a market share gain.
Okay, two numbers then. Your business definitely is evolving, and you've moved away from your core business. You're trying to innovate as well. What is the margin guidance we should look at? And ROC, that has been rock solid, 20-25% for a company that I think is trading at around 10 times core business.
Right.
What is the outlook on both these two, margins and ROCE?
Margins, you guys know me very well, right? We never forecast margins. I think we've delivered very strong margin profiles, 14 to 16%.
But ROC is something that you
ROC we care about a lot, right? Because I tell people that we are a high growth company. We have grown 16% over the last 16 years. We've grown 17% over the last 4 years.
Got it.
And our ROCs in the last 5 years have been about 23-24%. So for us, if we can keep ROCs about 20% levels, which is our clear North Star, and keep growing revenue at 12 to 14%, I think that makes a very compelling mix.
All right, we take that point. Final question before we let you go. You've come down to our studios. You've given us an FY30 revenue guidance of close to 38 to 3,900 crores. Outlook. Let's call it an outlook for, you call it an outlook, we call it guidance. 3,750 to 3,950 on an organic basis. If you add the inorganic business, it's close to 4,500 to 4,750 crores. So you are obviously looking for a company that gives you 300 to 350 crores revenue right now for it to scale up to 700 crores by the end of FY30. You have 1,000 crores of cash on your books. How much are you willing to deploy? When do we hear? And what company are you buying?
So, one of the compliments we get, and I'm happy to share it, is that as a team, we've done reasonably well on capital allocation, which means we've been lucky with allocating capital at the right time. We have mostly depended on CapEx for growth for the last 4 to 5 years and given dividends for the last 7 years. In fact, we up dividends when we think we don't have need for capital. Our FCF has been close to 47% of our EBITDA. Out of the 1,000 crores cash on books, we'll obviously accrue more cash for it. I would say that, we'll have to have a healthy mix between CapEx for growth, roughly 200 crores a year, dividends, keep the dividend track record very steady and strong, and deploy the rest for growth. Because if I was a shareholder, which I am...
How much are you, on an average, giving out in terms of dividend every year?
So I think we've sort of 20 to 40% is off the pat, is how we timed it up. But as a shareholder also, I would love to continue investing if we can keep growing at double digits and about a 20% ROC. I think that's the best use of our capital. I think M&A will be a very core part of our growth strategy, looking at how the opportunities are emerging out here. And, it could be 300 crore company or it could be 700 crore company right now. Who knows, right? So we're working very diligently on acquisition targets. My priority on acquisition is to think about diversification, right? Because in the tech segment, I think we have enough opportunities to grow that business line fast. Next would be consumption-oriented, right? How do you get into Suru? Because Suru has a very strong demand out there. And finally, if the consolidation comes in our core businesses, we'll be very happy to look at it.
So we hear something about this in this fiscal year itself?
We're working really hard, relentlessly hard. I hope we have something to talk about sooner than later.
And we'll re-invite you on the channel at that point of time. Thanks a lot, Rajiv. It's been tough times in the first half of the year. You're optimistic about business going ahead. And rough estimates, if you're doing a 15% PAT margin, then hopefully you'll be in that 550 to 600 crores odd. Valuations are cheap, but we'll have to see growth coming back. Thanks a lot for joining.
Thank you so much.
Time to slip into a short break. Come back, continue to focus on markets. Don't go anywhere.
Welcome back. Mildly in the red for the Nifty. Nothing really to worry. Just around the 24,800 mark. A lot of individual stocks doing a lot better, which is reflected in the mid-cap index, which is right above my head. So what we'll do is we'll track all those movers and shakers after this short break. The team of Trading Art takes all the market action forward. Thank you so much for watching Chartbusters.